Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing well, living your best healthy and happy life, and hopefully you are starting to get some of the fruits of your labor. A lot of you developing traders, it's a long road. Everybody's been there. Everybody's made the same mistakes. Everybody had the same thoughts. Everybody has the same doubts and all that stuff. But it gets better. It gets better over time. It gets easier over time. If you have been watching this broadcast for years, or even weeks or kind of months, you kind of know that technical analysis, at least for me, is everything, right? You could have a million opinions. You could have a love affair with your stock. But if technicals are telling you that sentiment is shifting, well, it's kind of smart to listen up here. And, I get a lot of questions, you can imagine, hosting a webinar and, doing these videos and emails and all that stuff, asking different parts of, what's going on with the PS60 theory. Guys, for all you guys who've been loyal followers, you kind of know what it is. For all my history, I've been trading since 99, long time. Went through the internet craze, went through everything possible, the financial mess, everything under the sun. And, I used to be a very heavy overnight trader, momentum. Then I switched to, I was a small cap swing trader for years, and then just at one point, it just stopped working. There were all these alert services popped up, and all these discords popped up, and all these moves were so artificial, I couldn't figure out why just weren't working. And then I sat down there for literally a couple of weeks, and I went through a lot of back testing, and what basically came out of it is kind of what you guys know now, 12, 13 years later, is the PS60 theory. And it's all about technical analysis, stocks trading from supply to supply and demand to demand via the 60-minute channels that are confirmed on the daily, right? On the daily channel. You can use it for anything. You can use it for any asset class as long as there is range, as long as there's legitimate volume. You could apply it to obviously stocks. You could apply it to cryptocurrencies, to futures, to Forex, everything under the sun. And instead of, me, and again, I have no problem. I have my pleasure answering a million questions. But since we're getting so many questions, in such a short period of time, I feel like I'm kind of reiterating the same thing over and over again to different people. What Kenyon decided to do is for the next week, the webinar is open. Kenyon's giving like an 80% discount for the webinar. It's like $40-$50 for the month. You come in, see if this is right for you. See it play out in real time. That's the most important part. Before you settle on any process, whatever the case may be, you really need to see it, right? You need to see what your eyes play out, and then your brain will kind of catch up to the price action. So there's a link below. Spend 30 days in the webinar. Again, like I've been saying for years, I personally don't think it's for everyone. I just don't. I don't. But there is a very, very decisive edge to it. These channels are very, very specific. Stocks just don't randomly stop. Because you see all these lines, a lot of people, before they come into the webinar, see, well, this is so irrelevant, there's so much noise. No, this is the reason where we're able to, to recognize where supply and demand is coming in. So if you are interested, guys, click the link below. It's 30 days, kick the tires, ask as many questions as possible, and that's the way to kind of see if it's a right fit for you. So hopefully I will be seeing a lot of you guys next week. So let's talk about the tape, right? If you look at the surface, nothing concerning, right? Nothing concerning yet on the NASDAQ 100. We are above the 50-day moving average on the NASDAQ 100. You saw the violence would happen for the last 2 Mondays, right? 2 weeks ago, you saw the DeepSeek announcement. Market got murdered. Last weekend, you saw the tariff talk. The market got murdered in the morning. To be really fair for the bulls, they did an incredible job, right? Brushing off both of those headlines and pushing higher, right? For the exception of Friday's reversal. We'll get to that in a second. The market put up 4 really good days from the tariff, quote unquote. I don't want to use the word bottom, but from the tariff pause. And the reason why I say that is because Friday mid afternoon, tariff talk started, sparking up again. And this is why we had such a really big reversal to the downside. And, one of the conversations we were talking about towards the afternoon on Friday was, well, who the hell wants to be long over the weekend? Again, if you're an investor, this has nothing to do with you. It's somewhere from the trading aspect. Like, who the hell wants to be long over the weekend? And the most important part is, yes, Trump gave Canada and Mexico a 30-day extension to kind of negotiate. Tit for tat is happening with China. China is not going to be an easy fix. They retaliated. But again, for the surface, right? From the surface, the bulls are holding on very, very well for now, right? Is it possible we have another damage occur on Monday morning? Yeah, it's very possible. Or we can have a scenario coming over the weekend. This is why the weekend is such a big exposure for both bulls and bears, because on the bear side, you could turn around and say, well, that's it. There's going to be another tariff war talk over the weekend. And the bull side is, well, wait a minute. They already started some dialogue with China. Well, what happens if the China United States tariff struggle is done and they reach some sort of firm ground? The market could be up 400 or 500 points. So I personally, from the tech space, I went flat overnight. The weird part about this week, and it's really not weird, as much as you saw some incredible moves this week to the upside, PLTR was incredible, absolutely incredible. We've been talking about old PLTR. Again, you'll notice there's going to be a theme to this video, right? Primarily, a lot of names that we're going to talk about here either confirmed their earnings highs or lows, or about to get there, right? So it's kind of sticking to that theme. So if you notice, PLTR got above this 107 earnings highs. Stock went all the way up to like 16 and change on Friday. Really, really big move. But for the exception of like PLTR, Meta, right? Really good quarters. PLTR, Meta, and what was the other one? And Netflix, right? And Netflix, I'm talking about strictly from the beta aspect. I know there's a bunch of names that did very well. But from the beta aspect, from the mega cap technology names, only a handful of names performed, right? And as much as the market is holding up, and it was pretty flat, down slightly for the indexes overall for the week, there's a lot of concerns underneath the hood. If you look at the scoreboard, right? And again, we'll get to individual names, right? Tesla missed, right? They missed their quarter. We'll get to individual ramifications. I just want to kind of go through the scoreboard. Tesla missed their quarters. Google, as much as they had a pretty good quarter, and this ironically was the best trade of the day on Friday, missed their numbers, right? Missed expectations. A pretty good quarter, missed expectations, kind of on the whisper side of it, not on the scoreboard side of it. And again, we talked about Google all week. If you've been watching the video all week, or watch the earnings lows, watch the earnings lows, watch the earnings lows. Well, that it took out the earnings lows and coincidentally also confirmed the 50-day moving average. That's like a double hammer, right? It's not even a single hammer. Losing earnings lows is bad. Losing earnings lows in the 50-day moving average, yeah, it's pretty bad. So again, another theme, losing earnings low. You have, for example, Microsoft, right? Did not have a good quarter. Look how close it is to losing earnings lows, right? That's the theme. Amazon came out with earnings. Looks like they've have now more revenue, right? More revenue than Walmart, which is absolutely phenomenal. But they guided slight weakness, right? The guidance wasn't great. The stock sold off as well. Again, this is one of those scenarios that in the next couple of days, maybe even on Monday, if this thing starts confirming earnings lows, this thing could get hit as well to the 50-day moving average. Apple, again, crappy quarter, right? Crappy quarter. Look how close it is to losing the earnings lows as well. AMD, again, what are we going to say to AMD that haven't been said already? Okay, AMD is very close to losing its earnings lows. And somebody tweeted at me when I made all these, all these, visual examples. Somebody tweeted me, goes, "You're going to short AMD at its lows? Ha, 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 ha." Yeah, because stocks don't go lower when they take out 52-week lows. Impossible, right? Just the way stocks don't go higher when they take out earnings highs. Impossible. Again, Stay in your lane. Nobody wants to hear your opinion. So AMD, again, is another example of a stock potentially this week could lose its earnings lows. And the one thing that you have to look at, right, when you're looking at the technical charts is how the stocks are holding up, right? How the stocks are holding up. How many, the percentage of these stocks are below the 50-day moving average? Well, you can see AMD below the 50-day moving average. NVIDIA, again, really nice bounce, right? If you've been following along, you've been obviously in the webinar, you know how good NVIDIA was this week, right? Reclaimed the 5-day, reclaimed the 150-day, reclaimed the 10-day moving average, and stopped at the 20. Again, it's continuing its bounce, right? Continuing its bounce, and now you're into these really, really big supply zones coming up. For NVIDIA to really get set loose, I mean, really, really set loose, it's going to need to close above 135 and reclaim the 50-day moving average. They report end of February, so you still have a couple of weeks there. But again, still underneath the 50-day moving average. Apple, underneath the 50-day moving average. Google, right? Underneath the 50-day moving average. You're seeing a theme here, right? That's not a good thing that the leaders are below the 50-day moving average. And you can make a case, and again, this is a very, very important case. You can make a case, well, maybe there's new leadership, right? You can buy that. Because again, in 99 and 2000, the leadership was, right? Disco, right? And Cisco was actually performing pretty well. Intel, right? Intel, by the way, is exactly the same price where it was 25 years ago, okay? Intel, these are the leaders, right? Oracle, still doing well. But you can see there's new leaders. So is it possible, okay, there's a new leadership that's taking its turn, maybe the crowdsources of the world, maybe the PLTRs of the world, right? So there is a very interesting argument, or at least an interesting discussion that says, well, these names are great. They're fan favorites. They're cult followers. But at the end of the day, the rest of the market is kind of brushing things off, right? Brushing things off, and new leadership is stepping up. It's like the old guard of the NBA. It was used to be Michael, Larry, and Magic, right? Michael, Larry, and Magic. That was that 80s, 90s, and then Shaq came into the league, and then Al Iverson came to the league, and Kobe came into the league, and on and on and on. LeBron comes into two. So you're going to see different leadership groups. So again, it's not out of the realm. This is potentially slowly happening, but from my world right now, from my world and what I'm seeing, the majority of these names, there is a problem, right? There absolutely is a problem. Going into this week, here's where we are again. Important over-under for the technical side. As long as the Qs are above 520, I think you're fine, okay? Nobody wants to see this engulfing candle that took out 3 days worth of buying. But again, it's here. The same way we saw this engulfing candle here, and the next day, the next day it got smashed. If you guys realize, this was last Friday. This was Monday, right? The big move. So this was this Friday. Who knows what happens over the weekend? So again, as long as we stay above 520, I think we're fine. If you look at the SPYs, right? Again, still very, very healthy. Again, if you draw kind of this imaginary trend line, the one thing that I don't like about it is 3 consecutive intervals of lower highs. You have a high here on January the 24th, you have a lower high on January the 31st, and you have a lower high on February the 7th. So that's basically telling you it's 3 Fridays in a row, there's an issue. You setting lower highs, lower lows. Again, as long as the SPYs are above 598, which is the 50-day moving average, you're going to be okay. So again, use those numbers to kind of gauge your level of exposure, especially if you are a swing trader in your book. If you're a day trader, I will tell you, in the last 2 years, okay, you guys in the webinar kind of know this, I haven't seen a more fluid, organic market 99% of the time. Stocks are obeying their channels. Stocks are stopping at support, bouncing. Stocks are getting rejected off supply. It's been incredibly orderly. Yes, you're going to have days, tariff talk, this, that, the other thing, deep seg, stocks all over the place, going through supply. Of course, that's that's an outlier event. And those days, you kind of want to stay a little bit out of bounds. But the point is the market's been trading incredibly well. Again, that's the whole point of the PS60 theory. Stocks trade from supply to supply and demand to demand. So let's talk about some charts, right? Let's talk about some charts going into this week. If you've been following along just in the last week, you guys knew how important that bottom channel is. All you got to do is go back to Wednesday's video, right? Go back to Wednesday's video is literally the video before this one. And all you got to do is just watch the video. Okay, guys, watch the bottom range, watch the bottom range, watch the bottom range. If we take out the January lows, it's going to get hit. Yeah, that's exactly what happened. Great mover, great mover this week on Tesla. It lost the 373 level. It traded all the way down to 360. As I said on Wednesday, we have a measure potential to roughly around 354. Tesla was trading after hours at 357. So your next soft landing is 354. I know a lot of you guys are in love with Tesla. You're very emotional about it. I get it. I do get it. I get it. I think 99% of all the traders are just investors. They're not, they're just investors. There's 1% of the population, maybe 2% of the population that trades both sides of the market. So I get it. I do understand what you're saying. It's nothing personal. Again, it's like you're angry at the ESPN broadcaster who's saying that your team lost that night. It's nothing to do about it, right? It's just the market goes up, the market goes down. So you're going to see, and this is kind of what I've been doing the whole week, trying to short it into pops, into supply, and short it in a natural pivot. Again, stock was trading down. You can see here on the 60-minute view, traded down all the way down to 357, 357 in the after hours. Again, the first support here is 354. And if the bulls can't hold 354, we go all the way down to 346. Amazon, right? Amazon, again, not a great quarter. They guided lower on a couple of aspects of their business. You could see here it stopped at the 34-day EMA. Obviously, I would love to see a continuation, especially if a gap. If we can get a gap up in Amazon and it loses Friday's channel, then yeah, I think we could get them next move to like 24.25, which is the 50-day moving average. Is it possible it goes on a 1 or 2 day dead cat bounce like Google did? And I'll show you Google in a second. Yeah, sure, it's possible. But I'm definitely watching the earnings lows this week. Google, okay, Google, I can't believe I'm saying it. I can't believe all the people in the webinar agree with me. Google was awesome on Friday, right? We caught this thing for nearly 5 points on Friday. It was absolutely awesome. Again, if you've been watching the video, I say, guys, watch the bottom channel, the 50-day moving average, the earnings low, right? That's the theme. So it took out the earnings lows, lost the 50-day moving average, and got right down to this between 83 and 84 level. The key with Google now is any pop, right? Any pops on the daily chart, as long as the stock doesn't take out the previous day's highs, needs to be shorted into pops. Obviously, if it starts losing this 82 level, then there's probably a problem with the rest of the market. You can see a move down into the 178 level, but absolutely great move. Apple, again, another perfect example of a dead cat bounce after crappy earnings. Here's the crappy quarter, right? It bounced 3 days, and now it's starting to look like Google. This thing loses its earnings lows, then you have a measured potential move going to the January lows of roughly 219, something to really be wary about. Let me see what else I talk about. AMD, I don't even want to talk about. What's there left to say? Microsoft, like I said in the beginning, is just holding on here, man. It's holding on to dear life. It's really getting close. If this thing could start losing the January lows, I think there's a trade there. Okay, I think there's a really potential trade there. PLTR, right? PLTR had a phenomenal quarter. Inverted hammer on Friday, which basically signals it probably gives a little bit of a pullback. Again, I would love to buy this thing into rising support. This has been an absolutely god candle, right? It's been a god candle ever since its lows in the January. So absolutely monster move. Inverted hammer, probably get a little bit of softness in the next couple of days. If you're an active trader, watch this thing below Friday's channel for a potential move into the 5-day moving average. Affirm its best quarter, right? Best quarter ever, right? In the history of the company. Again, this is the same notes as PLTR. Take a mental screenshot of Affirm, right? This big candle. Now take a screenshot of PLTR, right? Big candle, had 1 day worth of back test, kind of relaxing. The next day, fired up on all cylinders. So Affirm, we're kind of watching the same thing. I would like to be a buyer on this thing into any weakness, into 60-minute support, or if it doesn't get there, wait for the next day and probably be a second-day play to kind of ignite again. So again, if you look at the tape right now on the surface, everything's okay. Is there a shift in leadership that shouldn't really be concerning for the overall market? That's to be determined. But as of right now, the mega cap space is not performing well. They're giving us a lot of great opportunities. And the point is, if they start losing further channels, we can get a further back test. So again, folks, if you are interested in pivots or something that you think you could be interested in, again, click the link below, spend 30 days, ask a million questions. That's the only point of being there. If you're not asking questions, you're wasting your time, you're wasting my time, and you're cheating your development. Guys, God bless everybody. Have a great weekend. And with God's help, I will see you on the field on Monday.